If you've been following news last few weeks and the announcement from the major lenders, the interest rates have started to increase. In the context of home loans, this raises the question of whether you should keep your interest rate variable, fixed, or undertake the mix of those two options. Hey guys, welcome back. My name is Dex. I make videos about Australian property and finance. Today we are looking at fixed and variable interest rate in the current economic conditions. Now, once again, this is not financial advice. I'm simply looking at things from the broader perspective. So what should you do exactly? Well, it all depends on your current situation, your goals, and what you're actually looking to achieve. So first of all, let's look at variable interest rate. The main thing about variable interest rate is convenience that comes with it. You are free to pay as much as you want into the loan or just pay the minimum. It's up to you, or you can pay lump sum payment into the account. For example, you get some sort of large bonus, you can just pay the total bonus into your home loan and save on interest rate. So that's pretty fixable. Most variable loans have a redraw facility, means you have access to the money that you paid extra. Say you have expense of $4,000 coming up, and if you paid extra on your home loan by $10,000, that means that you can take out $4,000 to pay your expense and $6,000 stay inside the loan for the time being as a redraw. Just keep in your mind though, if you take money out of the loan, then of course you will be charged more interest. Another feature of variable loans will have option to package everything together and have offset account attached to it. So if you got 20,000 savings sitting in your offset account and your loan balance is 220,000, the bank will only charge you interest on the 200,000, not the full 220,000. It is the same scenario if you had 20k sitting in the redraw. It just works very similar, but the main benefit of offset account is that you do get a debit card that linked to your offset account, meaning that if you need to spend on your daily transaction, you can do that as well. Apart from saving interest, you can generally access your money pretty quickly with offset account, but with the redraw it might take up to 24 hours, and some banks are not that quick giving access to your redraw funds. Another positive of variable rate is easiness of refinancing. It is cheaper to refinance away from variable rate because you don't have to pay any break cost to leave the bank. Okay, now on to the negatives of variable rates. You're always vulnerable to the rate increases. Over the last 2 years, we have seen rates went down quite a bit. A lot of people who were on variable rates benefited from this. But eventually these rates will go up sometimes in the future. So just keep that in your mind. The other thing which is very important is that when the bank cuts the interest rate, they literally announce it everywhere. They send you emails, they speak to media about it, but when they increase the rate, it is not as prominent. As you know, majority of us set up direct debit and pay our monthly repayments without actually checking the interest rate every single month. So let me give you an example. Let's say that you have a mortgage of 600,000 over a 30-year period at a rate of 2% per annum. The payment will be about 2,217 per month. But let's say that the rate has now increased to 2.25. Your payment will now be 2,293 per month, which is about extra $76 or about $912 per year. Now, if you are on a very tight budget, you need to consider this, and this could be a very big factor for you. One more thing, if you do stay with a bank long enough, your interest rate will become outdated and you will pay a higher rate, while the same bank will be offering new customers a much more attractive rate. So watch out for that. So if you have elected to follow the fixed rate path, you get a certainty of repayments because your rate is locked in for 1 to 5 years or even more. Say if your repayment is around $2,000 per month, and that will stay at $2,000 a month until the fixed term ends. So if you are someone who loves budgeting and love to know exactly where the money is going, this could be a good option. Plus, you're also protected from any interest rate rises in the future. However, you do need to realize that with the fixed rate has a cost. That is, if you do find a good rate somewhere else and you're locked in with fixed rate, and you're looking to refinance, the bank is going to charge you a break fee plus the normal refinancing cost. Now this break fee or the break cost could be a couple of $100 or a couple of thousands, or it could be zero. It really depends on the bank typically. The closer you are to your fixed term, the lower the break cost is going to be. Say if you want to pay extra on fixed rate loan, there are a couple of restrictions. These restrictions often have massive difference from bank to bank. For example, CBA only allows maximum of 10K to be paid before any extra cost. But Westpac on the other hand allow up to 30K extra, which is huge difference. Plus there are only few lenders in Australia that allow 100% offset account with fixed rate loans. Many lenders don't allow redraw as well, so that keep that in your mind. Let's say that you accepted all these factors and you're happy to fix your rate for 2 to 3 years. Once the fixed term ends, I have seen many customers that get placed on very high variable rate. And this is something that you might not realize, so be mindful of this. If you like the best of both fixed and variable, check out split loan. A lot of banks offer this and it can give you flexibility to control your finances. If you really want to pay your mortgage soon as possible and just smash the mortgage down, then you do need to have some sort of variable component in there. Usually variable rates have been good if you expect interest rate to drop lower, but considering we are very close to 0% cash rate and it doesn't seem to be going down any further, it may be a good time to fix, or you can do a 50% variable, 50% fixed split loan. There is no perfect solution to figuring out the optimal setup, but it is more important to know how things work so you can make an informed decision. I really hope this video was helpful, and let's wait for the next RBA announcement and see what will happen. And if you do have any questions regarding property or finance, just give me a call. Thank you.